Welcome back to Wealthy Business, your go-to channel for the latest in finance, news, and personal growth. Today, we're tackling a hot topic in the financial world, the unraveling of the yen carry trade and its ripple effects on global markets. For those unfamiliar, the yen carry trade involves borrowing in a currency with low interest rates, like the Japanese yen, and reinvesting those funds into higher-yielding assets elsewhere. This strategy has been popular for years, especially as investors bet on the yen staying cheap and Japanese interest rates remaining low. However, things took a sharp turn recently. The Bank of Japan's decision to hike interest rates has led to a strengthening of the yen, causing a dramatic sell-off in global markets as the carry trade began to unwind. But here's the big question. Is the worst behind us, or is there more pain to come? Richard Kelly, head of global strategy at TD Securities, says it's too early to declare the end of this turmoil. He believes there's still a lot of unwinding left, especially considering how undervalued the yen has been. This could have significant spillover effects on global markets in the coming years. The recent sell-off in tech stocks has sparked concerns that we might be witnessing a bubble ready to burst. But Kelly argues that this isn't just a short-term trend. The Bank of Japan may need to continue tightening, which will further impact interest rate differentials and the overall market dynamics. In other words, the current volatility could be a sign of structural changes rather than a temporary blip. As we move forward, it's crucial for investors to keep an eye on the broader economic picture. The United States is set to release key inflation data this week, which could influence the Federal Reserve's decisions on interest rates. A sharp sell-off in risk assets last week was partly driven by weaker-than-expected U.S. economic data, raising fears that the Fed might be behind the curve in cutting rates to prevent a recession. Amidst all this uncertainty, some experts believe the recent correction was actually healthy. Jesper Kohl of Monex Group suggests that the market is refocusing on what really matters, the long-term fundamentals of the Japanese economy, including corporate restructuring and sustainable growth in real wages. So, what's next for the yen and global markets? Analysts at Barclays warn that it's still too early to call an end to the carry trade unwind. They expect volatility to remain elevated, which could continue to hurt emerging market assets. On the other hand, some economists believe that the worst of the disruption may be behind us. Jonas Golterman from Capital Economics suggests that the recent rebound in risky assets and currencies could continue, with the yen holding on to its recent gains and possibly making further headway into 2025. In conclusion, while the immediate shock of the yen carry trade unwind may be fading, the long-term implications are far from over. Investors should brace for continued volatility and stay informed as the situation develops. Here on Wealthy Business, we'll keep you updated with the latest insights to help you navigate these turbulent times. Thanks for watching Wealthy Business. If you found this video helpful, be sure to like, share, and subscribe. Don't forget to hit the notification bell so you never miss an update. Until next time, stay informed and stay ahead.